Here we go. All right, everybody. Stocks by the numbers. Welcome back. Really good update here. Phenomenal call by yours truly. We want to look at Sentinel One, ticker symbol S, listed here on the New York. This is a company, again, cybersecurity company. We were seeing revenue climbing up nicely, but I said, in my opinion, if you could potentially get it at a little bit of a cheaper price, obviously that would be ideal. I mentioned this trend line potential pullback at the time right here. March 19th was when we looked at it. So if we went straight down, we were looking at about 18. But I said, in my opinion, I'd look for the break to 20 and I'd look for sub 20. And I also mentioned about the losses that the company was bringing in. And we were looking at like, a $7-8 billion market cap as they were bringing in, 100 million in change, but still operating at a loss, which is why I said, in my opinion, if Wall Street could have an opportunity to pull something like this back, they would. I also mentioned the markets at the time were approaching, the Dow was just below 40,000. So I was obviously hinting that if markets pull back, a stock like this definitely could drop back down to the mid-teens. And that's basically exactly what happened right after we looked at the stock again back in mid-March. You can see we channeled down, we pulled back to sub 20, right to the trend line there of about 19 and a quarter, as you see. And then on earnings coming out, as they beat on both EPS and revenue, the stock still dropped down, hit a low of 14 and a third. So this was one that, of course, after the big drop, rebounded and climbed like an animal back to almost $30 a share. So if you were able to be patient, even if you position yourself here at 19, or you were able to wait, you got in at 16, 15, I mean, you still saw, 80, 90, potentially 100% returns if you just remained patient and waited for a good fundamentally growing stock to become more attractive in price and quote unquote come back down to earth. So I wanted to play the old video while I was showing you here in real time how it all played out, but the audio sounds terrible coming out of the monitor speakers and trying to get picked up from the from this microphone. So I'm going to post the original video in the comments or in the description, and I'll leave the timestamp of when I said what I said, and you guys can go back and you can look again, watch it in real time as you listen to the video, and then see, how that all played out. But Sentinel One, cybersecurity company, this was the last earnings that we had, and we can see a loss of 2 cents, revenue beats by almost 5 million, good beat, top and bottom line. Next quarter, again, really nice beat on the EPS side, posting a loss of 1 cent. They were expecting a loss of 5 cents. Revenue continues to impress and beat the mark. We can see the following quarter now, revenue comes in almost 199 million off estimates of 197 million. So they keep chunking up these estimates, but they're continuing to outpace what is expected by Wall Street on the revenue side especially. Now, we can look at the numbers real quick and we can see certain metrics like the operating expenses are continuing to remain high. However, I think personally it's only a matter of time before the company flips the script and then starts generating positive operating income and just continues to grow over time, because it looks like if we crunch the numbers, if they can get to around like 100 million more potentially in revenue coming in, that might put them over the top and flip them from the red to the black. So we'll see what happens, but technically they're growing very nicely excuse me, in the numbers. So I'd say this is one still to watch. And we can see for last quarter, they posted flat EPS. They were expecting 1.2 cents a share, but the revenue again continues to impress. Estimates of 209.75 million. The company posts over 210 million. So they're consistently growing, consistently outpacing Wall Street's estimates. Market cap right now, 7.57 billion. Not too bad in my opinion. The EPS was solid, of course, 3 beats over the last 4 quarters, slight miss last quarter. And we can see that recently, even as we're making more revenue, our negatives are kind of maintaining, which is why, of course, excuse me, of course, I understand the argument, as we know in business, you have to spend money to make money. And obviously, everything they're doing for the most part seems to be working out for them right now. Because again, in my opinion, the way I'm personally looking at the numbers, the fact that these losses aren't widening too much as more revenue is coming in, but on the flip side, the fact that we're steadily growing, increasing that footprint, and bringing in more and more revenue quarter over quarter, year over year. This is why I'm saying, in my opinion, it's really only a matter of time before they hop the fence and go black in my eyes. And that's why I do still like it personally for the long term. I can see this easily getting back to 30 plus. Uh, Maybe one day, of course, even into the high 30s and 40. But of course, we need them to stay on this path. So right now, I know everyone's upset they're operating at a loss, and of course, you want to watch the EPS. But personally, in my opinion, I think it's all about the revenue. And something like this, just as I said back here, could be thrown on your watch list, is a good performing stock, and I would just wait for it to come down, and I would try to add on big dips. And you can see every time it dips down, look, back to about, the high 18s, boom, it rebounds. Back to very low 20s here, 21, and then we had a big rage. Now we pulled back. We're at a couple of, one trend line I drew out. I'll go over those in a second, but in my opinion, I do think we could break here to 22. And of course, ideally, if we continue to drop down to the next trend line, if we can get this back at around 18, 19 a share, I think, in my opinion, that may turn out to be a gift. Now, of course, some people are speculating markets are going to continue to climb now that Trump won. In my opinion, I actually think that the reinvestment into America, as I said, is going to potentially strengthen the dollar. And as a lot of people say, as the dollar goes up in value, stocks should drop in value. So if we see, yields start to increase and the dollar strengthens and continues to climb, that may be the reasoning for the stocks to pull back. So similar to almost what we saw back in, I think it was like 2018, like halfway through his term, we were seeing, GDP numbers coming out strong, unemployment numbers were down, and you saw like what were viewed as a lot of positive headlines, yet markets just kind of didn't move. They didn't react positively as people expected. And if you go back, it's because, again, the dollar was holding steady and remaining strong. So, sometimes you need the perfect storm to help pump a market, but in general, I'm just saying, in my opinion, 2025 may be just like a slow, steady, downward consolidation year. And then potentially going into 26, mid-26, that's when the markets might rebound and start raging and really climbing. But anyway, all of that, the entire anecdote basically leads to you could potentially get this for a more attractive price, maybe moving forward. But in my opinion, technically growing very nicely. And let's look at the numbers real quick before we come back to the chart. This company technically fundamentally healthy, as we see. Debt here, very low 20 millions, and then we see for last quarter just about 20 million. This time last year, free cash flow minus 26.3 million, and we can see for last quarter minus 12.6 million. So that's moving in the right direction. Of course, again, as I said, the more revenue they bring in, the better these margins are going to be, the more narrow and narrow the losses are going to get. And then soon you're going to probably hear, gross margin moving in the right direction, operating income now positive, we're net income positive. So, in my opinion, it might happen sooner rather than later. And even the last couple of quarters, again, you can see, a loss of 1 cent, very close to break even. They made 1 cent. They were supposed to break even, right? And then we were expecting to maintain 1 cent, and we ended up breaking even. But even next quarter, expecting 1 cent, and moving forward, I think after that, maybe like 2 or 3 cents for the following quarter. So that's why you're starting to see the potential script flipping taking place. So that's why something like this could work out very well over the next 12 months, 18 months. You could see some serious growth here. But of course, if you happen to step in at these levels, this is why I always say, in my opinion, I would piece my way in. And then, if it drops, I wouldn't get upset. I would view that as an opportunity if the metrics of the business haven't changed, and I would consider adding to the position. But back to the numbers, 20 million in debt, over 300 million in cash. We've spoken over the last several months about companies like the tech companies with good profit margins, good cash on hand. Those are the stocks that are maintaining throughout this kind of rough economic environment. And 300 million in cash, 20 million in debt. If we subtract debt from cash, we're at about 280 million. We have assets outweighing liabilities in both the short and the long term. The equity, as you see, was at 166 dipped down and is now slowly coming back. We're sitting at 164. Over that same time frame, though, you can see assets slightly moved up about 100 million and change, while liabilities went from 600 million to over 7.25 million, 727.5 million. So we're back to where we started. However, these specific columns here on the balance sheet have not been consistently moving in the right direction. So even though the revenue has increased, and if we do something like the total revenue to market cap comparison, we're now going to get a lower ratio than we did back in March, so it could still look attractive. Technically, in the numbers, it's basically the same analysis as from when we first looked at it, right? You got to see if it could hold support levels. You could make an argument in the numbers that it could pull back to the low 20s, and then if it happens to break the next support trend line, of course, ideally you could potentially get this for 20, sub 20, down in the 18s and change, 17s and change. So again, I kind of feel the same way as I did back in March. However, again, the business itself has been growing nicely, the revenue coming in. But 164 billion. And we were back here, what were we again? 280. So now we're at 1.92 billion. And if we look at, what are we expecting for the year? We have Q4 coming up. Look, I mean, the EPS has been steadily coming in above estimates. This was the first miss here as of last quarter. And the revenue, as we know, has been consistently coming in above estimates. Had a slight miss here by a couple of million back in early 23. But you can see moving forward, look, we just brought in 210 now. We're above that 200 million milestone mark. And moving forward, we're forecasting continued growth. 222 million, 234, almost 250, over 263 million. So this is why, if we're going to continue to climb like this, and if we look at the numbers, we can see that as we approach this high 2, potentially 300 plus million mark inside of the next year, year and a half maybe, this company will become significantly more valuable in the market cap, which of course is the same as the stock price, right? Because market cap, a lot of people don't know, market cap is stock price times number of shares, right? That's how you come up with the market cap. But in general, I'm sure you guys can potentially see the writing on the wall. But here we can say, what, 24? I mean, they've been above estimates, so we're forecasting 818 million for the year. So let's say like 820, we can make a nice round number, right? We're at 820. And now let's look at the last couple of quarters. So we can see that we've kind of been holding around that 70 million loss mark. For Q1, we brought in 186 million, we lost 70. Q2, 198 million, we lost 69. And Q3 now, 210 plus million, we ended up losing 78. So if we're going to make a little bit more, but lose a little bit more, you know, maybe on the 220 million next quarter, the company may lose maybe around like 80 million and change, right? So if we just add up some of these numbers here, again, we'll go with 820 million for the year. And we can see loss of 70 million, loss of about 70 million, so we're at minus 140 million. Now we lost 78, so we're at, yeah, like minus 218. And then if we assume another like 82 million, right, we'll keep it nice and rounded. We'll look for about minus 300 million. So we're looking to bring in about 820 million to close out 24, and we're expecting to lose roughly about 300 million, which of course would leave us with positive 500 million. So if we go back to my quote-unquote fair value of the business, as I like to look at it, again, we have 280 million. With this is 1.92 billion, and then we said 500 million roughly. So 1.92, that brings us to 2.42 billion, in my opinion, quote-unquote fair value of this business. And you can see that we're a little over 3x that fair value number. However, again, it is a tech company. They are really growing like a weed. And I just think that because these losses are kind of holding, that's why the stock hasn't climbed and raged like an animal. So if we saw, though, see how the net margin percentage is climbing up, though, in relation to the revenue coming in? See, that's what I mean. That, in my opinion, that's like a quote-unquote big picture metric to look at, which is why I'm saying over the long term, All they have to do is keep doing what they're doing, and they're probably going to be a powerhouse in the space. Again, the cybersecurity company. But as we see here, loss of 70 million, 72 million, 70 million, 69 million, back down to 78 million. So if we saw like minus 70, minus, 68, minus 65, right? If you saw it slowly inching up with the revenue, this would be a $35 stock in my opinion. So again, this is just my opinion, it's not financial advice, but something to consider, something to keep in mind. Again, the book value sitting still above $5 a share, but has been consistently decreasing over the last roughly 8 quarters. So that's why, again, if you can make the argument that it could sell off 10, 20% in change, that's probably what Wall Street's going to do. But, of course, we know we can get any piece of news randomly. But price to sales, high 9s, that's basically par for the course here. Trading over 200 times cash flow. I mean, yeah, if we're just looking at that. 4.6 times book. We did get above 5 a couple of times, but over the last couple of quarters, you can see it's basically been between 4 and 5. So that's kind of par for the course, if you will. Enterprise value, which again is what another business would be willing to pay for this business, supposedly, is 6.88 billion. We can see market cap 7.57. So that's why, again, there are, several ways to look at this, to where we can see growth and strength, but we can also justify a pullback in the short term and potentially try to get a good entry here, especially if you missed this one, right? But our return percentages are slowly moving in the right direction. We were here minus 20+%. Now we're here in the minus high teens. Gross margin percentage kind of steadily climbing up, inching from the 60s into the 70s. Now we're above 74.5% the last 2 quarters. Operating margin was about minus 80%, and then we get above minus 50. Now you can see we broke slightly to minus 40, and now last quarter minus 42.3%. So it may be, again, a situation where it might take another 2-3 quarters, and it might be slow and steady. But again, as you saw, we basically nailed the pullback call to sub 20, but we knew there was still growth there. So we knew a good entry would be sub 20, and then the stock ended up rallying up to 29.30, right? So we know the growth and the gains are there, both inside of a couple of months, if you don't want to be married to it, and also for the long term, if you did want to tuck it away for a while. So that's why we kind of have advantageous moves for both the shorter term and longer term time frames here. So this one could be a very profitable situation if played correctly, in my opinion. Of course, you can say that about any stock, but you understand my point. EBITDA slowly moving up here, 37 minus 34, back to minus 37. Okay, nothing too crazy. Net margin percentage, minus 37, minus 34, back to minus 37. Asset turnover, again, how much revenue is generated off of said assets on balance sheet. The revenue has been chunking up nicely. The assets slowly moving up. So, of course, our turnover ratio is increasing. And our debt ratios, again, essentially non-existent. $7.5 billion company. We're talking 20 million in debt, right? So drop in the bucket. We don't get a dividend. Earnings have been strong. But yes, the income statement here, I just wanted to show you very quickly. And you can see the cost of goods. Look, see how we were inching up with more money we were bringing in, 140, 160 million. The cost of goods increased. And you can see 174 million for the quarter. Cost of goods, about 50 million. But look at moving forward. Now we jump up to 186 million. We're still losing 50. Actually, we lost less. Now we're up to almost 200 million, and we're slightly back up, but still losing about 50 million. Then we jump up above the 200 million mark, right? We bring in over 210, and we slightly move up to minus 53 million. Which is why I'm saying, as this company consistently makes itself more efficient and gets these losses more and more narrow and keeps them in check, almost like we saw with Fubo, we're slowly going to potentially head to that break-even overall point, and then maybe hop the fence and flip the script and go again from the red to the black, and then all of a sudden these things are positive. Total revenue minus cost of goods is gross profit. You can see, look at the gross profit back here. End of 22, 86 million. Fast forward, almost double, 157 million. So this is why it looks like all of these are moving in the right direction. Of course, the main issue the company's dealing with now is that the more it generates, the higher its operating expenses continue to climb. And you can see we're at over 246.5 million for last quarter, off the gross profit of almost 160 million. But gross profit minus operating expenses yields operating income, and you can see the operating income was well over minus 100 million, and now we're sitting here approaching the minus 70s, but holding at around the minus 80s, which is why I'm saying all of this is off of slightly over 200 million. So now if the overall loss is about 89, again, it might not go hand in hand dollar for dollar, but you understand my first point, right? If this company continues to grow its footprint and we eventually get up to 300, 310, 323 million, that may be the level and the mark to put this company into the black. And then there will be significantly more value to come over time. But yeah, that's pretty much it for what we have in the numbers. And again, I just want to show this was, if you remember, I said in the old video, please go back and watch again, because I'm going to put out the timestamps, and I believe it was like from the 11:20 mark to like the 13.5 minute mark. Like for those 2 minutes, I basically made my case for why I think it's going to pull back and the entry I would look for. So absolutely nailed it. But we said again, in my eyes, this was an IPO that was overvalued in the gate. Right? And we had a lot of hype, and then we just continually dropped, even with the company showing growing revenue, because it just wasn't realistic. Then you get to a low. We drew out our support trend line here. You can see it's still cutting across. It's still a key level here, even after we looked at it. But looking at the chart here, I say if we run, again, these are just random projected trend lines, okay? This is not set in stone. Anything can happen. But basically what I did was I went from each of these lows newly made after we looked at it, and I just kind of drew it out on the same angle of this support trend line, right? Almost like, you know, these little diagonal steps going upward here with the stock. And you can see that, you know, obviously this one lines up, but you can see that the stock pulled back basically exactly to this potential trend line that we're looking at here and stopped almost dead in the center of the wick, right? So this may be a potential turning point to where we try to bounce back up here to 24.5, but then ultimately reject. Again, as we said in the numbers, we do see some weakness. So if I just follow that pattern down, you can see the next step down might be about 22.25. And then, you know, if we bounce and come back down here, you can see you might get about 19 and change, maybe even lower than that, going into the ball dropping and maybe before next quarter's earnings. Again, we just got earnings on this stock, so it's going to be middle of March, which was the last time we looked at it, right? And that's why the situation, again, the revenue has grown, but the overall fundamental metric situation is moving in the right direction, but technically hasn't changed too much. As we said, looking at the quote-unquote fair value of the business, looking at the equity, total equity, just kind of getting back to where it was 2 years ago, not necessarily surpassing it. So that's why we can kind of make the same argument, which again is why I just drew out these kind of projected trend lines. And we'll see now if this, you know, works out and it happens to touch these lines. But, you know, called it correctly last time. So, of course, I'll say I'm confident moving forward calling it again. But we know we could bounce off this line, start heading back up to the 20-day if it wants to, because there is positivity surrounding the story. But in the numbers, again, you could make the argument that it pulls back. And let's just quickly check some news. Maintain sector perform Scotia Bank, price target raised from 25 to 26. Maintain outperformed by Bernstein, price target cut to 30 from 32, right? Price target cut. That's what I mean. They're looking at the numbers the way I'm looking at the numbers. That's why 30 is, you know, of course, bullish. And I said, again, in my opinion, the stock can probably get back to 30, the mid-30s, and even 40 over time. So I'm not necessarily disagreeing with that 30 price target, but notice the fact that even with the revenue beat coming in and the company continuing to grow, they cut the price target. to lower than 32. They brought it back down to 30. Meaning that, in my opinion, that probably tells me that they kind of see what I'm seeing, the fact that it could go down before it goes up, and that's why they feel 30 is conservative, especially since it hit 30 already. Poised to gain, quote, fair share in endpoint security. What is this? Is well positioned to gain its, quote, fair share in the endpoint security market heading into 25 and beyond, despite fiscal Q3 being a, quote, speed bump to its growth story. See what I mean? The way they lay it out? We're basically looking at the whole broad picture, and I'm saying, in my opinion, this is a great grower that can turn into a powerhouse. And once they hop the fence and go from the red to the black in the losses columns, it's going to be worth even more. But you can see, look, even when we looked at the last 8 quarters, they just missed EPS for the first time in 8 quarters, and they missed revenue once slightly in the last 8 quarters, right? So technically you would view that as a winner, right? I mean, they're 7 out of 8. They're doing great. But you can see, just look at the terminology, right? Could be whatever, fair share in the endpoint security market heading into 25 and beyond, despite fiscal Q3 being a, quote, speed bump to its growth story. I wouldn't even call it a speed bump, honestly. That's giving it too much strength, too much significance, too much gravitas, if you will. That it was a pebble in the road. You understand? Right? We're riding our bicycle down the path. We didn't hit a speed bump and go, holy crap, what the hell was that? No. We went, do and kept going. You understand? In my opinion, that's the way I look at it. But, as we said, who knows who's working behind the scenes. But this is why, again, in my opinion, this is the time, the experience, and this is why I look at the terminology in some of these articles as well. And again, sometimes I'm right, sometimes I'm wrong, but I'm usually right. The firm noted the company's fiscal Q3 results released late Wednesday featured a beat on the top and a miss on the bottom. Quote, we remain bullish on Sentinel One growth story as the company is well positioned to capitalize on industry tailwinds. They said the company has, quote, improving win rates across large enterprises, growing sales productivity, and new logo growth in the pipeline. Wedbush maintained the company's outperform rating and a $32 price target, right? So they want to beat it up, in my opinion, so you could probably buy more. But at the same time, they know it's a grower and it's going to 32 in their opinion, right? Okay. Yeah, see, operating expenses continue to climb with the revenue brought in, as we looked at on the income statement, and you can see operating expenses $246.5 million compared with $201 million in the year earlier. Revenue rose 28%. Net loss $78 million. This time last year, $70 million. For the first time, we delivered positive free cash flow on a trailing 12-month basis. Quote, a key milestone in our journey towards sustained profitability. That was the CFO. Based on strong execution and business momentum, we're raising our revenue growth outlook to 32% for the fiscal year 2025. For its fourth quarter, they anticipates revenue at $222 million. Analysts were looking for a little over $220 million, right? So again, moving forward, they're expecting again to continue to grow, continue to have these sales, and come in above revenue expectation. And that's why, again, almost similar to what we're seeing in SoundHound, right? Like, you want to see the growth, you want to see the clientele list increase, you want to see the market share expand, the footprint expand. We can worry about, making it more profitable later, right? That's why, again, similar situation. Now, I know, again, they're doing like a tenth of the revenue, but you understand my point, right? Something like SoundHound still operating at a loss, but people are more heavily focused on the revenue. And that's why something like this, it might not break up to 40 because they still have those losses. But as we've shown in the chart, any big dip discount selling down to the low 20s, the high teens, usually enforces an immediate bounce back because, what do we say? Can't keep a good man down. But for the fiscal year now calls for revenue of $818 million. Analysts originally forecasting $815.6 million. So we're not only consistently beating revenue estimates in the quarter, we're basically saying we're in a good place to beat for next quarter as well. And to close out the year, we're expecting roughly $2.5 million more to close out the full fiscal year. Guggenheim analysts who rate shares at buy with price target of 31. You notice a trend here. Quote, we believe management is trying to be more consistent when setting street expectations, similar to what their peers do, and believe this will benefit them in the long run. Analysts who rate shares at a buy with a price target of 30, notice the trend, wrote in a research report, annualized recurring revenue, 859, which was slightly above Wall Street's estimate of 857. That equated to net addition 53 annual recurring revenue. Okay, however, the analyst team believes many were looking for a net increase of closer to 55 million. Anything to try to make it look worse than it is, right? That shortfall could be dragging on the shares. Whatever. Maintain equal weight at Barclays. Price target cut to 28 from 30. Still higher though. Price target maintained 34 by West Park. Maintain as positive by Susquehanna. We know Susquehanna also was in the news recently, right? Taking that big stake in SMCI. Everyone else, trying to beat the stock up. Susquehanna sitting there possibly seeing what I saw and said, you know what, this thing could be huge. And they beat the stock up. It's down at 17. It's down at 19. Why don't we take a stake in this sumbitch? And that's exactly what they did. So Susquehanna also raising their price target, though, on Sentinel One from 28 to 30. Notice the trend. Price target raised to 30. Sentinel One. Price target maintained at 31 by Guggenheim. Notice the trend here. Price target maintained at 32 by Needham. But, yeah, little price target increases, right? Little recap of the earnings. But, yeah. So right now you can see, in my opinion, it's right at this line. So I'd keep an eye on a couple of these lines here. And I know, of course, again, they're not drawn out perfectly. If you try to draw them out, they might look a little different. But, again, just kind of giving you an idea. We could break this 23.5 level. We could see, the low 22s, and then you might be able to see 18.5 to potentially like 19.25, 19.5. So something to keep an eye on. Stock charts, I'll let you go. On the daily, we can see RSI pulled back to 35.75, and look, the stock just had a little bounce off the 200-day, relatively flat. 23.13, stock closed 23.57. But as we did chunk down with earnings, again, we could have the break. So we don't necessarily have to hold this moving average. We just came down to test it. So we'll see what happens. But also on the bounce back, again, back to this 20-day of the high 26s, you can see that's also where the mid-Bollinger Band and slightly above where the 50-day moving average is as well. So now on the technical side, you have to see if it wants to bounce and try to retest these levels, or if it's going to hang out and then end up breaking and selling off down to the lower 20s. MACD tried to retest recently and obviously crossed to the downside as we kind of popped up and then dropped after earnings. But the RSI can go lower. As we see, we hit sub 30, and we're technically not at that 30 benchmark. On the weekly RSI, basically middle of the road, 47.1/3. And look, also, we came down to retest the 50-day moving average on the weekly as well of 23.66. Stock closed below it, 23.57, technically bearish. And we can also see on the longer time frame, we have now come down and started to basically cross that MACD to the downside, which is why I'm saying, again, the sell-off can continue. And you can see as this bottom Bollinger Band will now curl with the stock, that's why I'm saying potentially low 20s, very low 20 level, maybe even sub 20. Could happen. Could happen. You could also make the argument that the stock dropped big and has kind of been tightening going into this wedge here since we last looked at it around March. And we've been climbing up in this wedge, and now we're breaking the wedge, which means if we go halfway down to where the wedge is, you can see that's about 21, sub 20, 21, between 20 and 21. Excuse me. So those are some of the levels I would watch. I know I'm all over the place, but I mean, it is what it is. We can see pivot points real quick, 22.61. So now after technically closing below the moving average, potentially breaking this, 6-8 month wedge or whatever, we may drop down, test that. And then you can see this next support level about 17.25. absolutely is possible. And in my opinion, unless markets start to chunk down, I would probably strike at that time, in my opinion. On the daily side, we can see we're right at a pivot point, 23.55. Stock closed 23.57. So we have some technicals possibly indicating a bounce, some technicals possibly indicating a break. So we'll have to keep an eye on it. And you can see also, look, last month, if we go back and look at a previous bottom support level, where is it? Between 20 and 21, right? Just sub 20, just sub 21, looking like about 2080, 2090. So that's why that might be your mark before you get an immediate short-term bounce. But again, technically coming down to this moving average and this pivot point here, closing 2 cents above it, technically, we might go either way. So this is one right now, kind of possibly undetermined. And we'll see inside of the next 1, 2, 3 days, you may have a clearer picture of whether we're going to have a nice bounce or whether we're going to be able to wait, remain patient, and get it on sale again. But that's pretty much it. So I'll end it there. Phenomenal analysis originally by me on Sentinel One, symbol S on the New York. Look back March 19 of this year. But that's it. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.